Hey everyone, and welcome back to the channel. Today, we're diving into a topic that could genuinely change your financial future, especially if you're a freelancer, a small business owner, or anyone who's self-employed. We're talking about the Solo 401k, which I like to call the Solopreneur's secret weapon for building serious wealth. If your VA ever felt like you were missing out on the sweet retirement benefits that traditional employees get, stick around because this one's for you. So, what exactly is a Solo 401k? Well, think of it as a supercharged retirement plan designed specifically for the self-employed. It's also known as an individual 401k. It allows you to save for retirement in a way that's incredibly powerful, often letting you contribute far more than you could with other plans like a SEP IRA or a traditional IRA. And the best part, it's not nearly as complicated to set up as you might think. We'll walk through all of that. First, let's talk about eligibility. To open a Solo 401k, you need to have some form of self-employment income. This could mean you're a freelance graphic designer, a consultant, an Etsy shop owner, or even someone with a side hustle that brings in a little extra cash. The key is that you have business activity. You can be a sole proprietor, a partnership, an LLC, or a corporation. The one big rule is that you can't have any full-time employees other than your spouse. That's why it's called a Solo 401k. It's for you and maybe your partner in business and in life. Now, for the really exciting part, the contributions. This is where the Solo 401k truly shines. You see, when you contribute to a Solo 401k, you're actually wearing two hats. First, you're the employee of your own business. And second, you're the employer. This dual role lets you make contributions from both sides, which is how you can save so much, so fast. Let's break it down. As the employee, you can contribute up to 100% of your compensation, up to a maximum of $23,000 for the year 2024. If you're age 50 or over. But here's the magic. As the employer, your business can also make a profit-sharing contribution on your behalf. Your business can contribute up to 25% of your compensation. Let's run through a quick example. Let's say you're a 40-year-old freelance consultant and your net self-employment income is $100,000 for the year. As the employee, you could contribute the full $23,000. Then, as the employer, your business could contribute up to 25% of your compensation. Now, the calculation for this part can be a little tricky, but it works out to about 20% of your net adjusted self-employment income, which in this case would be around $20,000. So your total contribution for the year could be $23, for a total of $43,000, for a total of $43,000. Where the limit for 2024 is just $7,000, you can see why the Solo $7. You can see why the Solo 401k is such a game changer. Another huge benefit of the Solo 401k is the option for Roth contributions. Not all Solo 401k plans offer this, so you need to make sure your provider does. But if they do, it's a fantastic feature. With a Roth Solo 401k, your employee contributions are made with after-tax dollars. This means you don't get a tax deduction now, but when you retire, all of your qualified withdrawals, including all the earnings, are completely tax-free. Imagine pulling out hundreds of thousands or even millions of dollars in retirement without paying a single penny in taxes on it. That's the power of the Roth option. Your employer contributions, however, will always be pre-tax. Let's talk about another great feature: loan provisions. Again, not all plans have this, but many do. If your solo 401k plan allows for loans, you can borrow against your own retirement savings. So, how do you actually set one up? It's easier than you might think. The first step is to choose a provider. There are many financial institutions that offer solo 401k plans, including major brokerage firms like Fidelity, Vanguard, Charles Schwab, and E*Trade. They typically offer these plans with no setup fees and no annual maintenance fees, which is fantastic. You'll want to compare them based on their investment options, fees, and whether they offer the features you want, like the Roth option or loan provisions. Once you've picked a provider, you'll fill out some paperwork to establish the plan. This is basically just the legal documentation that creates your retirement trust. Then you open the brokerage accounts for your plan. ULL typically have one account for your pre-tax contributions and another for your Roth contributions if you choose that option. The deadline to establish a new solo 401k plan for a given tax year is December 31st of that year. So, if you want to make contributions for 2024, you need to have the plan officially set up by the end of the year. After the plan is set up, you just need to fund it. You can make contributions throughout the year, or you can make a lump sum contribution. The deadline to make your employee contributions is usually December 31st. However, you have until your business tax filing deadline, including extensions which could be as late as October of the following year to make your employer profit-sharing contributions. This gives you a lot of flexibility to see how your business did for the year before deciding on that final employer contribution amount. Now, a couple of administrative things to keep in mind. The plan is generally very limited. However, once your Plan's assets reach a certain threshold, currently $250,000 at the end of the year, you will need to file a simple informational return with the IRS, called Form 5500EZ. It's a straightforward one-page form, but it's an important compliance step to remember as your account grows. Let's recap the amazing benefits. First, high contribution limits, allowing you to supercharge your retirement savings. Second, the potential for a Roth component, giving you tax-free growth and withdrawals in retirement. Third, the tax deduction. Your traditional contributions and all employer contributions are tax deductible, which can significantly lower your current year's tax bill. Fourth, the loan option, providing a flexible source of funds if you need it. And finally, they are easy and inexpensive to set up and maintain. For any solopreneur, freelancer, or small business owner, ignoring the solo 401k is like leaving free money on the table. It is one of the most powerful tools available to help you secure a comfortable and prosperous retirement. You work hard to build your business. You deserve a retirement plan that works just as hard for you. If you've been relying on just an IRA, or even worse, have no retirement plan at all, I strongly encourage you to look into the Solo 401k. Talk to a financial advisor or do some research with the major brokerage firms. Setting one up is a concrete step you can take right now to invest in your future self. It can be the difference between just getting by in retirement and truly thriving. That's all for today's deep dive into the Solo 401k. I hope you found this breakdown helpful and that it empowers you to take control of your financial future. If you have any questions, drop them in the comments below. I'll do my best to answer them. Thanks so much for watching, and if you enjoyed this video, please give it a thumbs up and subscribe for more content on personal finance and entrepreneurship. We'll see you in the next one.